So if you're a real estate investor or a business owner, chances are a big chunk of your wealth isn't in stocks, it's tied up in property or maybe inside of your company. And that's great while you're alive. You've got control, you've got leverage, but here's the thing. At some point, the CRA is going to come knocking, and that tax bill they come looking for, well, it could be in the hundreds of thousands or even millions of dollars. I'm Nader Nasser. I'm a senior portfolio manager and wealth advisor at RBC Dominion Securities, and I spend a lot of time helping families just like yours. People who have built something real, figure out how to keep more of it in the family instead of handing it over to the government. Now, let me ask you, do you own multi-residential, commercial, maybe industrial real estate? Have you watched those properties appreciate like crazy over the past number of years? Or maybe you've got a successful business with a holding company full of retained earnings. Maybe you're already thinking about how all of this eventually moves to your kids, or maybe even to your grandkids. Now, here's the problem. When you pass away, CRA treats your real estate as if it was sold that day. And guess what that means? Instantly, capital gains will be triggered. And even worse, if those assets are in a corporation, there's a second layer of tax when the money comes out to your heirs. And that's what I mean when I say succession risk. So, how do the wealthiest families in Canada deal with this? Well, one of the most effective ways is corporate-owned permanent life insurance. And no, this isn't about paying for protection you don't need. It's about using insurance as a tax and financing strategy. And here's the cool part. Your company buys the policy, and the policy grows quietly in the background, completely tax sheltered. But you don't necessarily have to tie up your own cash to pay for it. Here's the really neat part. With something called an immediate financing arrangement, a bank can actually lend the company the premium. That means you get the coverage and the strategy working, but you still keep your own capital free to reinvest in properties, your business, or whatever opportunities you see fit. Then, one day, when that policy pays out, the death benefit comes into the company, the bank loan gets cleared, and the rest flows into your capital dividend account, which means from there, it can be distributed to your heirs completely tax-free. That's why this strategy is so powerful. It offsets huge tax liabilities, it preserves liquidity for your business, and it creates a smoother path for passing wealth to your kids and even to your grandkids. Now, I've seen families save millions of dollars using this approach, and it's all above board. It's CRA recognized, and it's widely used by Canada's wealthiest families. So here's my ask. If you think you could be facing a big tax bill down the road, or you just want to see how the numbers might work in your situation, let's have a chat. Tap the link below, book a call with me, no pressure, just a conversation. Or if you'd like to quickly review things first, maybe do your own homework, download the strategy brief we've put together. You've worked hard to build your wealth. Let's make sure it actually ends up with the people you love and not with the tax department. Thanks for watching, and hope to speak to you soon.